All right, so we're on to part 3 of talking about the stock market. Just to recap the second part, we talked all about the financial statements, how to look at a company's financial statements to make a good investment. So we looked at their balance sheet to see if they have, a lot of assets, it's growing, their business is growing. We looked at the income statement to say, hey, our revenue is growing, is net income growing? Like, those are good marks to see. So today we're going to be talking about individual stocks, ETFs, and we're also going to talk about why. We're going to talk about the price of stocks and why it fluctuates. So this one will be maybe a little bit longer. So there's 2 different types of things that you can invest in when you go to the stock market. You can invest, we're just talking strictly about stocks. We're not talking about bonds or put options or futures or forwards or anything like that. We're not talking about any derivatives. This will be just strictly stocks. You have 2 things that you can really invest in my opinion. This is what I like to invest in. I like to look at individual stocks, so individual, and I like to look at ETFs. So individual stocks would say Apple's trading right now at $175. That's an individual stock, that's Apple. So you can go out and you can buy 10 shares of Apple. So you can buy 10 shares and you could buy that for $1,075, $1,750. Okay, you can do that individual. I do that a little bit, but my method is going to be more towards ETFs. I do own Apple, I do own some individual companies, but for the most part, we're going to talk all about ETFs. So, because I think it's probably the best way, the most passive way to make money. We will talk about individual shares more often in another video, but today we're going to be talking all about ETFs. So that's what individual is, investing in like one individual company. So ETFs, we're going to talk all about that and how you can invest in them and what they are. So what is an ETF? An ETF is an exchange-traded fund. This is what you really need to know and understand. So an exchange-traded fund. So you invest in the ETFs to track a certain index. So one of the most predominant indexes in the US stock market is the S&P 500. The S&P 500 is the Standard & Poor's 500 that includes the 500 best companies in the US. So Standard & Poor's is a company that picks the 500 best companies and they lump them all into one. So they get all those individual companies, they lump it into one to make up one type of return. So actually I need to kind of talk about individual stocks again. So with individual stocks, before we kind of go on to ETFs, like you see it could be Apple. So these individual stocks, or you could say Microsoft, or you could talk about AMD. Companies like this would make up the S&P 500. So it'd be a multitude of these individual companies at different prices. Say Apple could be $175. Microsoft would be like $85. Say AMD was $11. So all this value would go into the S&P 500. And then each day, say Apple was up 1%, Microsoft was up 2%, and AMD was up 1%. This would add into the S&P 500. It's also weighted as well by market cap. Something you need to talk about is market cap. Make sure you know what this is. Market cap is going to be the, say Apple, so Apple, all of their outstanding shares. So say Apple issued 1,000 shares. So they have 1,000 shares in circulation. And that's going to be multiplied by the current price. So say in this instance, it's 175,000. So their market cap is the amount of shares they have times the price. Say it's $175,000. So say Microsoft has 1,000 shares as well, but that's only at $85. So that's going to be $85,000. So what they do is they weight these percentages. So the companies that have a bigger, market cap, say that their percentage is 1% for the day, that's going to have more influence on these 500 companies. But really, like I said, the S&P 500 is weighted by market cap. So the companies that are bigger in size are going to get more weight into it. So say for that day, Apple's 1%, and like I said, Microsoft's 2%, and AMD is 1%. it'll go up something like, you know, 1.4% for the day. So it takes up all these and it diversifies all of those companies. So if one company has a bad day, one company has a good day, it diversifies it all out, but they pick the best 500 so that you have good returns. So this is just 500 of the best companies. So that's the first thing. This is something that I invest in as well as the S&P 500, so I'm going to keep it up here. The next most important index that we need to talk about is the Dow Jones Industrial, which is also called the Dow 30. The Dow 30 has been around for a long time. They pick the 30 biggest and best American companies as well. And these are going to be all value companies. So like I talked about in the past video, I talked about value companies. Those are going to be companies with good, strong brands like 3M, Apple. They're going to be companies that are, like I said, good brands. They're established, making good revenues. That's what's going to be in here. So there's going to be more value companies. There's going to be 30 of the biggest and best companies. But they're all going to be value. They're all going to be value companies. So they're not going to be having extremely high growth. I mean, it's going to do well, but they're not going to be big growth companies. You're not going to see them double revenue, price is going to be going up, price is going to be going up. So Dow 30. I personally don't invest in this, but you do need to know what that is and understand. The Nasdaq is something else that you need to know. The Nasdaq is more into technology. We're talking about the Nasdaq index and also into the housing market a little bit. So Nasdaq is all about technology. So if you invest in the Nasdaq, in that ETF, that's going to be all about technology. Something else you'll probably hear about is the Russell 2000. If I could spell. It's the Russell 2000. So the Russell 2000 is 2,000 of the best small cap companies that you can invest in. So there's going to be companies that are going to be more growth oriented. They're going to be smaller. They're going to be trying to double their revenues. They're going to have more market share to double their revenues. That's the Russell 2000. But really what's most important for me is the S&P 500. So there's going to be 10 industries in the stock market that you need to know about. So there's going to be 10 industries, so 10 types of companies that you can invest in. You're going to have technology as one. So let's say a company is Apple. You're going to have energy. So these are going to be companies looking for petroleum and looking for oil. So say this would be something like, we could say Exxon. Say, again, we could have telecom is another big industry. This is going to be like Verizon. We also have consumer discretionary. So this is going to be people that sell stuff that people don't really need. So say that it would be like a clothing, well, people need clothing, but say it would be like an alcohol business. Say it would be like Jack Daniels or someone like that. I don't know exactly. Say it would be, this would be great. Yeah, it could be something that you wholly don't really need, like a TV company. So it could be like Samsung in this instance. They sell things that are discretionary that people don't need. And while there's consumer discretionary, there's also consumer staple. So consumer staple is stuff that people need. So a company like that would be like Walmart. They sell food. They sell, I know it's a mixed bag, but let's just have it for example, food. People need food. There's also health. So big companies like Cardinal Health, located in Columbus. So health types of companies. We also have materials as well. You have materials. People that make different types of materials. That's not an industry that you can look at. Financials is a really big one. You can look at companies like JP Chase. You can look at Discover. You can look at PNC. Companies like that. So let's just put like JP Morgan. And then one of the last ones that we want to talk about is utilities. Utilities is the last one out of the 10. So utilities would be like gas provider, electric provider, water provider. So that wraps up what we were talking about today. We were talking all about ETFs, exchange individual stocks a little bit, the the important indexes that you need to know about, and also the 10 industries. If you guys have any questions, shoot them down in the comments below. And then make sure you check out the next video. We're going to talk all about brokerages, where to invest your money, and where I invest my money personally. So catch you guys next time. Like, subscribe. See you guys tomorrow.